All right, what's up everybody? We're gonna go ahead and get started here in just a moment. But for now, if you can hear us and if we are streaming in 1080p, just go ahead and give a thumbs up in the chat so we know and we will get started. Oh, you know what? Let me go ahead and do this. I always forget to put the DVR on, like for the rewind. Let me do that now. All right, you should be able to rewind if you refresh your browser. Let's go ahead and give that a go, and yeah, it should be good. It's another windy night. I'm just trying to get the microphone situated. All right, I think we're good on the rewind, right? All right, cool. Let's get started. All right, so good evening, everybody, and welcome back to Walks and Wall Street. Today is Sunday. It is April 21st, 2024. It's about 9:05 p.m. Eastern Time, and we're reporting live directly across from the beautiful Plaza Hotel. Check this out. We're sitting right outside of the GM building, General Motors building, and just off to the right, you can see the one and only Apple Store. So a lot to talk about tonight for those of you who are new to the live stream. We do a few things here. So Monday through Friday is when we have our main show, usually starting around 8:30 or 9 o'clock at night. We do a deep dive in everything that happened in the financial markets that day. Also, on Saturday is our day off. We kind of just walk around the city, pick usually a different neighborhood and explore it. And then Sunday night, which is tonight, will be our Markets Outlook stream, where we pretty much try to go day by day and give a forward-looking view of what we have going on in the market. So I think we'll just do a quick high-level overview and focus on doing that now. So this week in the market, starting off on Monday. Now it is Passover, so there's really not a lot going on. Anybody who celebrates Passover, have a great one, first and foremost. But Tuesday is April 23rd, and we're going to get some very important economic data. We're going to get the S&P U.S. Services PMI, which is a very good leading economic indicator we always talk about. That's going to drop at 9:45 a.m. Then we also get the S&P U.S. Manufacturing PMI. That's also going to drop at 9:45 p.m. A little bit different from the Institute for Supply Management Manufacturing PMI and the Services PMI, but still very good leading economic indicators to look at. We're also going to get some data on new home sales for March. Now, the median forecast is for 670,000 new homes sold. If we compare that to what it was last month, it was about 662,000. For Wednesday, we're going to get the durable goods report, which is going to come out at 8:30. And then on Thursday is pretty much the main day that everybody's going to be looking at, is because we get Q1 GDP numbers out. Consensus is for 2.2%. Previously, it was 3.4%. So Q1 GDP should come in around 2.5%, or I should say 2.2%. And then we're going to get initial jobless claims for April, and that is going to be around 215,000 for the consensus. See if that happens. I have some interesting comments about that, which we'll talk about later in the stream. And then we're going to get pending home sales. They're supposed to be flat month over month. I also have some interesting takes on my view of home sales, and then we'll wrap up the week on Friday with the PCE index as well as core PCE. So we're going to get some more inflation data and then consumer sentiment as well as personal income. Now, last week in the markets, we got absolutely creamed. It was heavy de-risking across the board on Wall Street. Anything that had tech or semiconductors in front of it really got sold off, and the market really shifted to more defensive plays, and we saw this very evidently in the tape. If you look at the XLE, that was really the only safe haven on Friday. Also the XLF, which is the financial center, or the financial segment, was a very big safe haven on Friday as well. And then utilities. Utilities were also a very bright point in the market for rotation. So far, this sell-off is normal. If you look at where the S&P was as we just came out of that correction in October, which was the end of October, we've been straight up since the beginning of November all the way until April. So hopefully what we're watching is this key level at the 200-day moving average on the S&P, which comes in right at 47.11. So an 8 to 10% correction isn't the end of the world. We'll watch for this market to bottom, build a floor, and then hopefully we can rotate back into some of these more high-octane names. But we'll check in on futures. Futures are actually a little bit higher. I would say about 8 points higher on the E-mini futures contract, ticker symbol ES for the S&P 500. Futures are trading at 5,011. We'll look at the Dow 30 futures contract, which is ticker symbol NQ. We're up about 60 points, pretty much flat, 38,271 for the Dow Jones Industrial Average. And then we'll take a look at the tech-heavy NASDAQ 100 futures, which just opened up about 40 points, currently trading at 17,220. I think this will probably be a rally week. At least all of the technical indicators signal that we are very, very oversold. If you look at the VIX, ticker symbol VIX, we had a little bit of a blow-off in the VIX. Intraday, this was on Friday, so right before the market closed, intraday the VIX hit 21. We've came back down, settled at around 18. That's usually, once you get over 20, that's usually when you can kind of look for opportunities to say, okay, is the worst of the decline behind us? Now the market could rally back to the 50, roll over again, retest the bottom, and kind of chop around here through the summer. We'll see. Before we get going, I really want to check on crude oil futures, ticker symbol CL, and crude is actually down. If you remember, we were doing the stream 2 Fridays ago, so April 5th? That's when crude hit a high of about $87 a barrel. Light crude has come down to $81, and it actually looks like we're falling in futures right now. And that 200-day moving average comes in at 79. Lots to talk about there. But without further ado, let's go ahead and get started, my friends. Let me see here. All right, let me just close up the laptop. We'll get started. Just a quick announcement. This Thursday, okay, we will be posting our next edition, or I should say next issue, of our free investing newsletter. So if you type !news, NEWS in the chat, you will receive it in your inbox Thursday right as the market is closing. This is the newsletter we sent out 2 weeks ago. We send it out every other Thursday after the market closes. We talked about a lot. Talked about commodities, precious metals, flight to safety trade, and the Bitcoin halving. All right, that's all I got. Let me go ahead and close up the laptop, and we'll get started, everybody. Happy Sunday. Oh, Todd, thank you so much. Says, thanks, Tom, for all you do. and for sharing New York with us. Todd, thank you for your very generous $10 donation. I appreciate your generosity and your support, and I'm happy you're here. Now, it's another windy night, unfortunately. Weather's not too terrible. It was a bit cold today, cloudy, as it always is in New York, but the only thing that I don't like, everybody, is the wind. It's been very, very windy this week. All right, we have Hawaii. What's going on? I see Richard Vogel, Jeff W277. Thank you so much for joining us. I see Charles Hong from DC. Hey, Charles. Jeff in Southern Tier, New York. Always a pleasure. I see Mary is here. Sally Robinson, Steph UF, Vincent Lee, Diana. What's going on? Zozo Bob from the beautiful Miami, Florida. Super jealous. Hopefully I'll be back in Miami very, very soon. Now, since we're here, this is the flagship Apple store on 5th Avenue. And right adjacent to it, you're going to see this building. We pointed it out a bunch of times, but we do have some new people here. The address of the building is 5 East 59th Street. You can see it right here. Now, this just sold at auction, I believe at $26 million or $23 million, I forget. It sold to a very notable jeweler from Miami, funny enough. Really, really nice jewelry store, and then the rest are going to be corporate offices. This is the building we were going after. We were going to buy this building. Unfortunately, you don't win all the deals. What we were going to do, well, I guess I'll tell you a little bit about the building. This used to be the old Playboy Club, right next to the Sherry Netherland Hotel, which is right here. The previous owner had about $80 million worth of bad debt on the building. It needs a total gut renovation. It's 2 retail units and 8 office. And you also have digital signage on the facade. So technically you could probably get, I don't know, $850,000 worth of revenue from a digital display on the side. But we were going to completely renovate the building, 2 retail units on the bottom, 8 offices, and then we were going to try to put 2 condominium units on the top. Unfortunately, we didn't get the deal, but I'm very, very excited to see what they're going to do to this. Like I said, a very notable jeweler from Miami picked up this building, and I think they're going to do really well because you can't get a better location than this. I mean, look at this. Guys, this is prime Central Park South. You're right next to the Sherry Netherland Hotel. You're looking all the way to Columbus Circle. You see the Deutsche Bank centers. You're adjacent the arguably one of the most iconic buildings in all of New York City, the Plaza Hotel. And you're right here outside of the Apple store. So pretty cool stuff. And I think you're going to start to see more of these deals happening as a lot of these older office buildings go into foreclosure. There'll be a lot of, entrepreneurs and private equity trying to pick up these buildings for pennies on the dollar, rehab and replace them. And I think that's a good thing for New York because we are going to get a lot of new product. And hopefully many of that will be residential. Fingers crossed, because, well, if you haven't noticed, we have a little bit of a housing crisis, or I should say an affordability crisis in New York City. So, hey, Frank is here. What's going on? I see British Gray. Patrick, New York. Check the Logic. What's going on? Donna, welcome. Let's try to see if we can head to the Lower East Side tonight, but for now we'll cross Central Park South since we're here. I think there was a Rangers game tonight. I always like this shot looking directly down 5th Avenue. It's such an iconic shot down there. Now, a little bit of anecdotal data on how the economy is doing in New York. My friend was in town, texted me out of nowhere, asking me if I wanted to go to Del Frisco's. I was like, absolutely, I do. He was in from Miami. And we went there at about 6 o'clock. And I believe on Sundays, all the major steakhouses, all kind of around, Radio City Music Hall, I believe they all open at 4 o'clock. So we went there around 6. And guys, we didn't make a reservation. We just kind of walked in. Oh my God. The place was absolutely packed. We had to wait a little bit and then we were seated at the bar, which is totally fine. But I mean, wow. And this is, this is a holiday weekend. This is Passover. So even still, you had, just the restaurants in New York City have been absolutely packed. So, you do the math. There's 2 levels at Del Frisco's. People are spending money. And, I think this kind of goes in tandem with a lot of the stuff that we've been talking about as it relates to a lot of quote-unquote cash on the sidelines. Not really as a bull thesis, but more along the lines of a lot of people are very well capitalized from the decade of ZIRP, which essentially stands for zero interest rate policy, which we'll talk more about in a moment. But guys, look at this. So this is the side entrance to the plaza. This is not the hotel. This is the residences. So you can own in the plaza or you could rent. This is where you would enter, which is the Central Park South side. It's a very charming building, obviously. Really, really beautiful. You could see One Central Park South. Now, at one point, Trump used to own the plaza, or I think a stake in it. So One Central Park South and One Central Park West were the 2 addresses he owned, which is, you couldn't get better addresses than that. Now, One Central Park West, Trump still owns that. That is the Trump International Hotel and Tower. That is at the northernmost side of Columbus Circle. So 2 really iconic and beautiful addresses right here. But anyway, and I was having a conversation with my friend about this today, and it's that I think the Fed overdid it and over-indexed, not just by a little bit, but by decades, if you think about it. Because if you look at the wealth sort of divide in the country, regardless of your political opinions and your political, I would say, aspirations, we could all agree on both sides of the aisle that the old cliche saying, like the rich are getting richer and the poor are getting poorer, that is like an actual real reality and a real fact in a major way. You have about, think about if anybody who owned a home, right, or let's say multiple homes, or even just an equity portfolio, since 2013 even, let's say 2014, it's doubled, if not tripled, right? And in specific parts of the United States, if you own property, you even had a more turbocharged, I should say, bull market that was spurred by the pandemic, right? Particularly Miami, Florida, places like Fort Lauderdale, Palm Beach, select parts, of Austin, Texas, things like that. So I guess the point I'm trying to make is that some people in the United States right now, I should say some sections of the socioeconomic ladder, have gotten so wealthy that they're this point it's almost kind of indestructible. And here's the kicker, right? Here's kind of the double whammy, which is interesting to think about. So let's say even if they liquidated all their stuff, right? You now have an environment at the perfect time where you could just roll all of your liquidity into money markets that's going to compound out at 5.5% to 6%, because you never know, maybe the Fed even raises rates again. We'll talk about that in a little bit. So if you go to the St. Louis Federal Reserve website, or FRED, right, FRED data, combined both institutional and retail money markets, we might as well let's go to Central Park. Let's actually we'll take a walk like right on the baseline of Central Park, just to show you guys what it's like at night. So if you add up both retail and institutional money markets, and institutional means, $1 million plus account, there's almost $6.5 trillion in money markets now. Now, again, I'm not trying to say that that is a bull thesis for stocks. What I'm trying to say is it's a bull thesis for the economy, right? The stock market is not the economy. I'm not going to say the stock market's going to go up forever, but if you look at consumer spending, right? If you look at inflation, when consumers spend and they can eat all of this extra inflationary pressure, what does that do to the lower rung? It further drives people into the lower rung, And I think that's something that the Federal Reserve is going to really need to take into consideration. I don't know. That's something I was playing around with in my mind today. What do you guys think? Hey, John is here. John Southern. Thanks for joining us. UniJ23 has joined the chat. Thanks so much. And JY. What's up? What's up? Peter. Brad says, Tom, with halving complete, I'm ready to run up to 100. Yeah, for sure. I am too. I am too, man. Now, guys, this building is 50 Central Park South. This is the Ritz-Carlton Hotel and Residences. But right across the street here on 6th Avenue, I was actually looking at an apartment here with my coworker for a client. This really, really nice unit here in Trump Park East, not to be confused with Trump Park. So there's two different buildings. There's 106 Central Park South, which is that door where those two people are walking out of right now. And then there's 100 Central Park, which is right here, which is considered Trump Park East. Now, these are older kind of Art Deco style buildings, so your maintenance is going to be a little bit higher. But in terms of the ticket price, so like the ask, it's trading at a significant discount, I think, to everything else for two reasons. One of the reasons we talked about is the Trump name, right? Whether you like it or not, a lot of the brokers I've been talking to in Manhattan have said, you know, a lot of people are shying away from that name. But also, you have a lot of these ritzy, glitzy skyscrapers that are going up that a lot of people are attracted to with a lot of the amenities. But if you're just looking for a nice place to live right on Central Park South, you can get some deals. And there's a lot of sellers that are really, really motivated in these buildings, interestingly enough. All right, we're going to cross back over. Patrice 2020, what's going on? Thanks for joining. PLA 30 says, Tom, I used to watch HR Puffin Stuff. I don't know what that is. All right, let's cross here since we have the light. Goldie, what's up? Now, it may be a short stream tonight, so I guess we'll just run through a lot of this stuff rather quickly. There's been a lot of talk, and I've actually gotten a few emails now about what is the possibility or the likelihood that the conversation as it relates to the Fed and monetary policy could take a complete 180, right? And go from, okay, when are we going to get rate cuts to, whoa, let's pump the brakes, and actually, are we going to get another rate hike? Well, I don't know. I think if the Fed did that, I think you would have limit down across the board on all the major equity indices, because the market has been pricing stocks essentially to a T to say that there are going to be rate cuts this year, which there may, but if we continue to have these plus 3% inflation prints, the Fed is probably, in my opinion, and again, my opinion doesn't mean much, but if we continue to have very, very aggressive, I should say, inflation prints plus 3%, well, you can best believe at almost every single FOMC meeting, they'll probably just pause and they'll just try to be complete hawks to have the market do the majority of the pricing in for the Fed. And you're already kind of starting to see this, though, are you not? We talked about the yield curve. We talked about the 2-year Treasury. 2 years almost at over 5%, or just about at 5%. So you're starting to have this market backtrack a little bit, and I think that the talk of, what's it called? A rate cut, and the dovishness so far of the Fed has really kind of juiced this market even more, I should say. Hey, Rafael says hello from Puerto Rico. What's up? Yeah, Peter says a name change from Trump isn't going to affect the building itself or its structure. Extremely short-sighted. I totally agree. But again, Peter, like we were talking about, and I actually think you presented this point, right? Just as in the equity market or the stock market, prices are by and large driven by emotion. And humans are very, very emotional. So emotion and uncertainty creates mispricings in the market, which I also think creates opportunity, in my view. It was interesting because my colleague and I, we were doing, not like a study, but we were doing some diligence for a client we were working with. And essentially the diligence was, what is the average time on the market on Central Park South in all other buildings but Trump buildings, and comparing them to Trump buildings. And it's quite astonishing. Listings are sitting a lot longer in Trump-branded buildings for whatever reason, right? We won't kind of get into the political whatever. We respect all sides, but the reality is that is the reality. I think that is a mispricing, but who knows? MD, what's up? Stands as major banks have 500 billion less than this time last year. Customers shopping for higher rates. I just think the banks now have competition for the first time in a long time, right? Think about, we just talked about treasuries. Are you going to leave your money in a savings account where it's still essentially zero, or are you going to roll in the treasuries or other products that will give you attractive yield? So, but by and large, to be fair, right, that is a good point, a very good point. But to be fair, right, we covered this extensively last week. Financial earnings were actually very good. A few hiccups, which we've talked about. I try not to be biased. I got an email, which was very, very good feedback. I feel as if my optimistic nature can show too much where it turns into a sales pitch. And I get that just because that's kind of the way my brain is wired. I feel like everything that I get into is like, oh my God, I'm going to make a fortune here. That's just kind of my brain is wired. So I think it's important to kind of tone it down a little bit, which I get. But I would say the biggest red spots or the warning signs from bank earnings, which we've discussed, is this slow trend, I should say, towards pre-pandemic levels in delinquencies across the board in consumer debt, which essentially means people are now, falling behind on their payments, on credit cards and other debt, auto loans and the like. I don't think it's gotten too out of control where we need to freak out, but it's gotten to the point where you need to watch this like a hawk, and we talk about this a lot in the newsletter. However, in terms of the money-making activities at major banks, particularly the investment banking side of the house, that's actually doing as good as it's done since 2021, right? Here's Alliance Bernstein. Now, we all know, not to sound like a broken record, but many pure play investment banks went through, I would say, earnings recessions since the top of the market in 2021. 2022 was a tough year, and then most of 2023 was a tough year for investment banking. Why? The M&A market was pretty much dead. The IPO market was pretty much dead. No deals were getting done. There was tons of uncertainty, and interest rates moved 500 basis points. Now, I think we're kind of, I think we can definitively say we're over that now. Bank of America, JP Morgan Chase, Goldman Sachs, Morgan Stanley, across the board, just totally blowing it out of the water in terms of investment banking revenue. Goldman Sachs had its best quarter in terms of IB revenue since 2021. And we all know what happened in 2021. That is when you had the deal-making boom on Wall Street. So I think in general, earnings season is off to a good start for the financials. And this is in an environment where, guys, we have to realize, a few years ago, we were talking about a potential or on the cusp of another banking crisis. Like, I feel like things have moved so fast since COVID, we kind of just tend to forget about this stuff. But it's not too long ago, we were talking about major potential spillover effects from Silicon Valley Bank and the like, right? Like major contagion. Never materialized. That's bullish. So, hey, Tampa Zaid, what's up? Thanks for joining us. Good to see you. MD says, I'm wondering what the default rate is on the personal loans. Oh, like the startups like SoFi, Upstart, etc. What is a lot of that stuff called? The buy now, pay later stuff. Remember we were talking about that? I think you'll probably see some speculative froth there. I don't know, not a big fan of the buy now, pay later stuff. I think it can be rather predatory in nature, honestly. Some of it, not all of it, but some of it. Rocky Rocks is in the banking sector, just JP Morgan's Chase, Goldman Sachs, and Morgan Stanley. Nothing else. All the others are crap. These three control the country's economy. Interesting take. I'm not sure if I agree, but interesting take. I mean, JP Morgan Chase is the mega bank of all mega banks, for sure. EMV says, regarding the listings that... Oops. I'm just trying to get to as many comments as I can. That are mispriced because of the Trump name. Do you think there is a scenario where those listings lose additional value for whatever reason and become bargains? Yeah, I mean, look, nobody knows where the floor of the market is. But the reason why I think I see value, right, and this is just making relative comparisons to other stuff that's selling. Now, don't get me wrong, there's downsides to these buildings. They're a little bit older, the common charges are high, things like that. But it's undeniable from like really top-end brokers that I've been talking to in the city, as that is a potential catalyst. Now, could they fall further? Yeah, I think the only thing like where you won't see a fire sale there, like you could probably see a very attractive valuation, but I don't think you'll see like an absolute crazy fire sale in those buildings for one particular reason, and that is the following. In my experience, and again, this is also anecdotal, but in my experience, the majority of owners of individual condo units in those buildings, because I used to live in that building, so I have a little bit of more context. A lot of them are pied-à-terres, meaning they're not primary residences. So these individuals maybe have a place in California, a lot of them do. A lot of them have another place in Florida, and they don't really need to sell it. They don't really need to liquidate. So if they're looking at a number and they can't get that number, and they're like, you know what? We could probably sell this at a loss and we'll lose $450,000 to $500,000. But do we really need to, and do we want to do that? And the answer so far, right, because we've been putting in offers on these units, the answer is no, they don't need to, and they won't. So they would rather just rent these units out in hopes that the market recovers long term. That's what I see on the higher end, which is interesting. And I think that's a big sore spot for buyers in general, because there's a lot of people, kind of like what we talked about with this coming off the decade of ZIRP, zero interest rate policy. There's a lot of people out there now, not only in New York City, but across the country, that have a ton of equity in their home. Okay, that's number one. So tons of equity, huge equity build. And number two, the vast majority of people have interest rates that are fixed, right? They've learned their lesson from the great financial crisis with all these adjustables. They've locked into very cheap money for 30 years at under 5%. So if there's not a catalyst where they need to liquidate, they would rather just say, okay, I'm not going to sell this thing for a loss. I'll keep it. I'll either pull it off the market or I'll rent it, and we'll revisit in a year or two. At least that's what I've been seeing, and that's been very, I mean, in full transparency, it's been very frustrating for a broker to get deals done. Anyway. All right, everybody, we are walking down 53rd Street. I always love looking at this facade right here because it's kind of, I don't know what the exact material is, but it's almost like crystal, kind of looks like. Frank says it's a huge problem now with the supply equation. People just don't want to sell their properties. MD says, I think we're actually going the wrong way. I have to head downtown, but let's head back. This is MoMA, Modern Museum of Art. Beautiful, beautiful museum, and it's right next to 53 West 53rd Street. That's a building that is classified as a Billionaires Row building. It is not on Billionaires Row, but you get the point. All right, let's get back on 6th Avenue and then we'll make a left. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these streams almost every night starting at 8:30. Hey, Davi, what's going on? Good evening to you. I trust you're doing well. As we head into, hopefully will be a little bit of a bounce week as we enter into the first correction of really the new bull market since we've broken out in the new all-time highs on the S&P 500. This is this private restaurant that is exclusive to the building here. 53 West 53rd. This is very common amongst these buildings. Billionaires Row. Central Park Tower has their own restaurant. 157 has their own restaurant called The Living Room. 432 Park Avenue has its own restaurant as well, and then 53 West 53rd has it. So you can get in-room dining. It's a lot of really, really interesting stuff. Now, I've also been getting a lot of emails kind of staying on the topic of housing, because we are going to get a lot of housing data this week. We're going to get new home sales data. We're going to get pending home sales data. So it's going to be a housing heavy week, if you will. But I've been having a lot of Canadian viewers, so viewers from Toronto, Canada, email me with some really crazy stories about the housing market in Canada. So if you guys think the US isn't affordable in terms of housing, I mean, try buying a place in Toronto. I mean, the housing market in Toronto, Canada is crazy. You know, just starter homes, you know, you're looking at 750 plus into the millions. Even some condos, like a modest condo is like 700. It's crazy out there. Nikos Jr. says Columbia only accepts 4% of applicants. Why? The school is mistreating their Jewish students. And they are in a tough neighborhood. Go to Cornell. Yeah, it is. I mean, it's crazy. It's crazy. I mean, I think the Ivy League has been a little bit corrupted and a little wonky and a little weird over the past, really even over the past decade. Funny enough, speaking of Cornell, my brother went to Cornell. But, a lot of smart kids in the engineering school. I used to hang out with a lot of my brother's friends. Man, those kids are freaking geniuses. Crazy, crazy smart. But I don't know, maybe that's just college in general now. Here's what I'd like to say without getting too political. I think you have the smallest subsegment of people at these institutions that are the loudest and are the most. That's kind of how I perceive it. I don't think it's the majority. It's the very, very loud, rambunctious, and kind of like insufferable minority, if you will. All right, guys, this is another big asset manager on the street. This is Nürburger Berman. Now, I've hung out with a lot of people that went to Barnard. There's some really good people, I know, but there's also some people, like, the culture there is a little weird. I don't know, and maybe I shouldn't be saying this, but a lot of them come from very, very wealthy backgrounds, right? And they are, either from the Midwest, or they're from the Southeast, or they're from California. And, they're 19-year-old kids, 19-year-old girls, and they think they know everything about the world and how America's so horrible. But, I mean, they come from families that are worth like $50 million. So I think it's a little bit of like self-loathing, if you will. And it's very strange. It's very, very strange. And the only thing I would say is, if you come from a background of, instead of demonizing it and saying that America sucks and everybody's such about it. And that's really why I never hung out with those kids. I mean, I've been to this was way back in the day when I was in college. Like, I went to some parties and they're just like a little weird. I don't know. Anyway, what do I know? I went to public college in the city. All right, we're walking past UBS. Now, I want to quickly backtrack here. For a second, because we were on the topic of monetary policy, right? So I think it's important just to quickly regroup here because, ladies and gentlemen, in 10 days, we are going to hear from Fed Chair Jerome Powell again. Yeah, that's right. So the FOMC meeting is going to be coming up here again in 10 days. Currently, the Fed funds rate is at 5.25% to 5.5%, right? That is the Fed funds rate. Now, if you go to the CME group, so if you go to CME.com and you look at the Fed Watch tool, so essentially the futures market speculating on where interest rates are going to go, is it possible, and I want some feedback because you guys are smart and I really, really value what you have to say, do you think it's possible that this narrative or this conversation regarding monetary policy could shift and do a complete 180 and go from everybody talking about rate cuts to, whoa, let's rethink this. When is going to be the next rate hike? Because inflation is running out of control and we continuously have prints above 3%. Do you think that's possible? Not possible? Or do you think the Fed is just going to kind of hold steady here and just kind of talk down this market and essentially just come out at a lot of these meetings with very, very hawkish demeanor? Alan's is possible, yes, likely, probably not. Yeah, and I got your email about it too, and you weren't the only one that emailed me. It's an interesting conversation to have. Kind of like I said a little bit before in the stream, I think that if the Fed did come out here and say, guys, you know what, we're going to have to start hiking rates again, you'll probably see limit down in this market because everybody on the street is going to have to reprice these assets for an even higher rate environment. Right now, stocks are priced forward-looking, obviously 6 months, with the expectation that rates will kind of soften and come down a little bit. Joseph says, I think we could hold steady. Cates is definitely going to be talking down the market. Davies has been hearing that inflation in the U.S. is here to stay. Well, I mean, it sure seems like it. I mean, the last CPI report we had was what, 3.5%? It looks like 3% is the new 2%, essentially, is what it seems like. Victor says if the Fed does start rate increases, the market will absolutely tank. I think so too. I think that's kind of the camp that I'm in, because you got to understand, then you have to reprice everything. You have to reprice all of these assets. I don't think they will do that. They've communicated very clearly that they are at the top of the hiking cycle, which I think we are. I think they just need to hold steady, and the market can withstand these higher rates, which has really defied a lot of the experts, right? The experts are like, there's no way the market's going to be able to hold up at the Fed funds rate being 5.5%. Well, turns out it has. Vincent says hold steady, rates cannot go higher. Dan H says I wish they will increase it. I mean, it'd be great for savers, right? I mean, money markets are like 5.5%. Jimmy B says it's going to take something serious to stop people from spending like crazy. Jimmy B, I agree, and that's kind of why I told the story at the very, very beginning of the live stream. Let's cross here. This is 6th and a half Avenue, by the way. I don't usually take you guys here because it's usually a massive wind tunnel, but not a lot of people know about this. There is a 6th and a half Ave in New York. West 53rd Street, 6th and a half Avenue. Let's walk through the corridor again. So regarding the spending, right? I agree with Jimmy. There's going to need to be some sort of massive catalyst. Look at how beautiful this place is. Guys, look at those chandeliers. We're essentially in an atrium now. It's nice, right? We almost never come here. I should say come through here on the stream. Virtually never. Look at that nice bar. It's cool, right? But anyway, that's kind of why I told the Del Frisco story today. And you could even see here, there's tons of people dining, and it's like 10 o'clock at night. Now, not to sound like a broken record, but it's very, very important, I think, we kind of debate this and understand it. I'm still hung up on the fact that this past decade, as we've emerged out of the great financial crisis, the wealthy in America got wealthy to a degree of like cartoonish wealth, so to speak, right? Like ridiculous amount of assets, ridiculous amounts of liquidity. And that is really what's, keeping this spending still robust. At the top 10% of Americans are still spending like crazy. I mean, we just got consumer spending numbers out, and people are spending money, right? And I really think that's just the after effects of really the greatest bull market the world has ever seen, from 2008 all the way to when it topped during COVID. There was so much wealth accumulation that it's going to take a lot of time to blow through that. That is kind of why I believe it is possible that we do have 3% inflation, the new 2%. But the good news is we'll probably also have higher US GDP prints. That is a possibility. Now, many of you would be saying, well, middle class and lower class Americans cannot afford sustained 3% inflation. And I agree with you 100,000%. The people that are just scraping by cannot afford sustained 3% inflation. I mean, things are like ridiculously expensive, but there is a large swath, of people in the economy that can afford to pay these crazy, insane prices due to, again, the cartoonish wealth accumulation during the last bull market. So I think it puts you kind of in between a rock and a hard place with it's good news, it's bad news, and it's all weird news mixed together. I don't really know how else I could explain it. But at least that's what it seems like is happening. Okay, guys, this is looking up towards Carnegie Hall. Hey, Teresa Diaz, what's going on? Oh my God, look who it is. Guys, it's Disney cast member. I haven't seen you in such a long time. Hopefully you're doing well. Our fellow Long Islander here. Trust you're having a wonderful, wonderful spring. Thank you for stopping by. Frank's high interest with structural shortage of housing is worse for inflation. Agreed. Alan says, Tom, consumer debt continues to climb to an all-time high. People officially do not give a crap anymore, apparently. Swipe now and figure out the consequences later. That's kind of interesting too, Alan. You make a good point, because you are 100% right, and we could see this in the data of big banks, right? And Federal Reserve data. Credit card balances are at all-time record highs, and you're just starting to have delinquency rates kick up here. And this is actually at a time where it's not opportune to carry a balance on a credit card. Well, I should rephrase. It's never an opportune time to carry a balance on your credit card, but consumer debt is the worst type of debt because it is very, very high interest debt for the most part. Check out these two yellow labs here. Beautiful dogs. A little bit off topic, I think I said this before. My childhood dog was a yellow lab. And I believe this particular breed, as the dogs get older, they have this problem. I don't know if it's like an arthritis. I don't know the exact name of the illness. But it's like their hips kind of rotate inward and their hips sag. And over time, they lose almost all mobility of their back legs. It's really sad, and they can't walk upstairs. And that's exactly what happened to my dog. Those labs are really, really prone to that. Right around 10, 11 years old, you'll kind of start to see that deterioration in the back hips on those yellow labs. Now, this is the old Carnegie Deli. The Carnegie Deli used to be amazing, but now it is totally blown out and vacant. I remember the story here, and they said that they couldn't afford the rent, so they had to close up shop and leave. And now the whole building is just totally vacant. Let me see if I can put the camera up over this, and you guys tell me what it looks like inside. Can you guys see anything in there? I don't know if you could see anything, but that used to be the Carnegie Deli right inside there. It's totally vacant. Empty. It's sad because Carnegie Deli used to be awesome, man. I mean, damn. Hey, Chris, thank you so much for your very generous and kind $2 donation. This is me and my newborn watching before bed. Info A+. Oh, well, congratulations on your newborn, and all the best, all the health and the happiness in the world. But yeah, right here on the corner of West 55th Street and 7th, this was the very famous Carnegie Deli. I know we're kind of all over the place tonight, but the original, I would say, the really, really good original Jewish delis in New York, a lot of them have gone out of business, unfortunately, which really sucks. But there is one on the Lower East Side, which, you know, please God, as the weather improves and, you know, things like that, we'll be able to go down there. Katz's Deli is fantastic. Hopefully that'll never go out of business. This is the Park Central Hotel. This was a complete gut renovation here. Oh, hip dysplasia, you're right. Michelle K says, how's the Beagle doing? Beagle's doing good, thank God, knock on wood. I wonder what they're going to make out of that building, because it is, I mean, that's like prime location there. Sabrina Ferris says, don't feel like working tomorrow morning. Yeah, I know, but you got to power through it. You got to lean into it. Look, it should be a light week. Tomorrow's Passover, so. SoCal Lawrence says, yeah, Tom, Lower East Side, about time. Dude, realistically, when is the last time we've been to the Lower East Side on this stream? Probably a year ago, I'd say. The thing is, it's so far out of the way, and right as you turn that corner and you head all the way to the Williamsburg Bridge, most times in the winter, it's just a total wind tunnel. So assuming the weather gets better, we'll be down there for sure. All right, everybody, we're now outside the Carnegie Hall. But for all those new viewers, this big monstrosity of a glass building right here is 157. Now, this is Billionaires Row, so 157 West 57th Street was the first building ever constructed on New York City's Billionaires Row by a developer named Extell, E-X-T-E-L-L. The CEO and founder is Gary Burnett. And a few years later, he went on to build another building, which is now the tallest building on Billionaires Row, Central Park Tower, 217 West 57th Street, another Extell building. It's over 1,500 feet tall. It's an amazing, amazing building. It's right here. This thing is monster. But right in front of it is 220 Central Park South, which is Steve Roth's company, so that's Vornado. They're actually publicly traded. Now, Vornado doesn't usually do these massive residential super talls. To give you an example, Vornado's actually leading the charge on the Penn 2 project, which is the revamp and replace of the Penn Station district, which is turning out to be fantastic, by the way. But yeah, they are now the best-selling building on Billionaires Row. And then you have this building in the distance, 432 Park. The developer is Harry Macalo, and he also did the largest office-to-condo conversion in New York City's history at 1 Wall Street, which is adjacent to New York Stock Exchange. 580 units, only 20% sold. Pretty expensive. Finishes are nice, but a little pricey. If you're in the neighborhood, maybe you see, maybe you go to a concert or something at the Carnegie Hall, check this place out. It's called PJ Carney's. It's a very, very nice Irish pub. The food is actually very good, and it's a very cool environment in there. Really, really nice. And it's been here for a long time. I think since let's see, I should say it actually. 1927. Wow. But yeah, it's a fun environment in here. Really, really cool. We'll check out Alwyn Court and then we'll double back all the way down. Someone says gold futures are slightly lower. Well, that's good news. I think this will probably be a rally week on the street, but this is correction territory now. So what's probably going to happen is we're probably going to chop around, at least in a perfect scenario, hopefully. We'll probably chop around through the summer, through May, and then the tail end of the summer, once the shakeout is complete, we can resume our uptrend. At least that's kind of what I'm planning for. We'll see. This is Alwyn Court. The address is 180 West 58th Street. This building is really an architectural marvel here. Really beautiful. Oh, Optimus 17 says you went there many years ago for happy hour. It's a cool place, right? Yeah, marketing, videography. PJ's is fantastic. They have a good burger. It's actually really good food there, surprisingly. A lot of bar food's not good. That's bar food's actually really good. Now, Alwyn Court looks way better during the day, but still looks good now. This building just on our left is a co-op. This is 200 Central Park South. Great building. Almost every unit that is north-facing or east-facing has a balcony, but it's a co-op, so it's very, very difficult to get in. But guys, could you imagine that? Like having an apartment right here? You get a front row seat to the Macy's Thanksgiving Day Parade. You just literally stand outside on your balcony and you can see the parade going by. I think they're doing facade restorations here. Someone says, did you catch the Persian parade on Madison earlier? I didn't even know there was a Persian parade today. I had no idea. Which is strange because I was on Madison Avenue almost all day today. Huh. I'll have to Google that. I was on Madison Avenue all day. David is here. What's up, David? Says, do you think investing in office space today is a good idea? It seems like everything is getting converted into residential. I'd say yes and no. Mostly no, but there's very, very slight nuance. And here's the nuance. What the media won't tell you, right, because it won't drive a lot of clicks, is a lot of office is doing really, really well. However, it's just a very, very small subsegment of the market, and it's really Class A office towers, right? So you're seeing a material shift. This is the main entrance at 220 Central Park South. Citadel Securities' Ken Griffin, I believe, owns 2 full floors here. But what you're seeing is a massive shift from the older Class B and Class C office towers to prime and pristine Class A, like 425 Park Avenue, the new 270 Park, pretty much all of the Hudson Yards. So the trend that we've been seeing in the market is the following. Major companies are downsizing in terms of overall square footage footprint, but they're upgrading in terms of the quality of the asset. So it's going to have floor-to-ceiling glass windows. You know, it's going to have all of these crazy amenities to draw people back to the office because, I mean, let's face it, nobody is really going to go back to the office if you have to work in a 1970s dusty cubicle. It's just not going to happen. So you have a flight to quality. You have a flight to really, really good product. You know, high ceiling heights, everything's super beautiful. You have amenities, you have wellness rooms, you have restaurants in the buildings. Those are doing really good. Everything else is getting punished. But I think that's where the opportunity lies. If you could pick up one of these distressed assets, if you will, if the numbers work to do a condo conversion, by all means, do it. Or what you're probably most likely going to see in some cases is these will just be demolished and they'll just build new residential. Because office to residential conversions are a lot easier said than done. Oftentimes you can't do it just because of the layout of the floor plans, the floor plates and whatnot, the plumbing, the HVAC. It's very, very difficult, but it can be done. I mean, a lot of that stuff is being done in Lower Manhattan due to some of the laws that were passed by the city of New York. Old Tape Archives. Thank you so much for your very generous $10 donation. I appreciate the support. Old Tape Archive says, pick up a coffee in the morning. I will. Thank you so much for your generosity and supporting the broadcast. Thank you, thank you. Hey, Michelle's here. Says, love New York City. Good to see you, Michelle. Stealth FX. What is going on? I just totally blew past this restaurant I wanted to point out real quick. Now, this recently just closed down for renovation, but they just opened back up. This is a Michelin star restaurant called Maria, and it's quite literally across the street. So right on Central Park South, this is a really good spot. And this place is always busy. Right here, Maria. Somebody's talking about the Dakota. Yeah, we'll try to go up there too. Now, the problem with the Upper West Side, I love the Upper West Side, but there's no internet. So you're gonna have this like constant buffering every time we go up to the Upper West Side, as to why we really don't stream up there a lot. But the Dakota, if you're wondering, is on 72nd Street and Central Park West. Gorgeous building, unbelievable building. I mean, that's like a dream if I was able to have the means to live there. I mean, you're right at Central Park. You have this beautiful architecture. Now, is that neo-Gothic architecture? The Dakota, what would that be considered? Gothic? I don't know. Anybody in the chat? I think it is, right? Gothic style? I don't know. Maybe if somebody could Google it and put it in the chat. All right, let's head down because we went the total opposite way of what we were supposed to. But guys, this is now the Deutsche Bank Towers. So no longer is this the Time Warner Centers. Deutsche Bank took over. Andreas says saludos. Saludos, Andreas. Stealth FX says, this is my favorite New York City stream channel because we can tour New York and discuss the markets. Well, thank you so much for being here. Who Dat Dave says German Renaissance style. 10-4. Thank you. Now, I remember when pretty much half of these retail storefronts were all vacant. Now you got a pizza place here, you have a Magnolia Bakery. And I think that's a vegan ice cream place. Hey, Mikey is here. What's up? I guess we'll look at a map for all those unfamiliar. So this is a map of New York City, my friends. The big green blob is Central Park. We're right here. Right here. So we are going to go all the way down through Times Square, past the Port Authority, to Penn Station, the Moynihan train hall right there. So if in case you're curious. Oh yeah, that's right, Anthony, I appreciate it. That's wild. Anthony says we're approaching 50,000 people here. Whoa. I was there when you had 5,000. It's kind of wild how we've progressed here on Walks on Wall Street. I appreciate all of the viewers. It's a really fun time. Really, really fun time. So thank you all for subscribing to the channel. That's going to be wild. Maybe we'll do something fun for 50,000. Wow, 50,000 people. I'm trying to visualize that. That's a lot. Maybe we'll do something cool. I don't know. All right, back on 57th Street. Let's cross. You know, since we don't have the light, let's get back by Carnegie Hall and just blast all the way down 7th. Amanal says, what is the requirements excuse me, to become a real estate agent or knowledge on what you are selling? Well, the barrier to entry is pretty much nothing in the United States in terms of getting your real estate license. You take a 72-hour course, and that's about it. Then you take a test. Now, does that mean you're going to make any money? No. The overwhelming majority of agents don't make any money. But I don't know. I was also thinking about that the other day. I think there should be stricter requirements or raising the barrier to entry because I mean, if you have a license, right, a license to sell real estate, I think there needs to be a little bit more vetting, so to speak. Just because these, you're dealing with people's homes. I mean, oftentimes, if you look at the data, a person's home is their largest asset throughout their life, on average. So, I don't know. But yeah, and just in terms of just like what are the requirements, in New York, I think every state is different, but in New York, you take a 72-hour class, and then you take a test in Lower Manhattan. That's really about it. But I would just say do deals first. Do deals on your own, right? The best way to learn about a business is to be a participant, right? Have skin in the game, right? Do deals, make mistakes, understand how to deal with tenants, right? Understand, how to model a deal. What makes a good deal, right? What specific improvements can you do to the property to potentially push up the rent rolls, things like that. And oftentimes you can learn a lot of that stuff by going to work for somebody else, right? Maybe you want to work at a really big shop, like a real estate private equity shop. Go work there as an analyst for 1 or 2 years, right? You'll essentially get paid. It's kind of like an apprenticeship. You'll get paid as an analyst to work on deals. And then if you want to go out and do your own thing, go ahead. Shop your own deals, buy your own deals, broker your own deals. It's kind of the same thing in the investment business. If you want to be an investor, right, or a trader, by and large, some of the best traders and investors of all time, they started off working for somebody else, right? Not all the times, but a lot of times. I mean, think about the hedge fund business in and of itself. The king of the hedge fund business, Julian Robertson, right? Tiger Global. From Tiger Management sparked a lot of the Tiger Cubs. If anybody here is, you worked at a hedge fund, you worked on Wall Street, you probably know Julian Robertson, the Tiger Cubs, right? Essentially, when that hedge fund, a lot of the analysts who worked at that hedge fund, they spun off and made their own hedge funds, right? But they all learned those principles and the techniques and how to invest money properly through Julian Robertson. And now there's tons of Tiger Cubs, as they call them. I think, unfortunately, one of the most famous ones right now, Bill Hwang, right, got in a little bit of hot water as that hedge fund blew up. Walter says, are the city bikes for free? They're not free. I think it's like $2 and change an hour or something like that. Or you could buy the pass. I think the yearly pass is like $230. I think so. I'm trying to think. I believe a yearly pass for the city bikes is just over $200, or maybe a little less. It's not a bad deal, but here's the problem. How often really are you able to ride these city bikes in a comfortable environment in New York? 30% of the year? I mean, there's no way you're going to ride a city bike to work in January or February. I mean, unless you have some serious mental fortitude, I think you're going to get pretty taxed taking a city bike to work, in the whipping winds and the rain. Yeah, Victor says Ken Griffin is the GOAT of hedge funds. I would say like the GOAT of quant strategy, perhaps. I would say Citadel, like there's a lot of different strategies, right? When you talk about a hedge fund, there's a lot of different strategies that hedge funds run. As of late, I'd say the most sexiest, buzzwords, right? And mainly because they've provided outsized returns are the quantitative strategies, right? Now there's a lot of quant shops on the street. I would say the most, like if you're graduating college, right? And like if I had to do it all over again, right? And the kind of pedigree that I came up with, nobody even in my household knew what a hedge fund was, let alone an investment bank or anything, right? But if I was from that pedigree and I knew like about the financial world, I would have done things a little bit differently. I probably would have studied computer science, and I probably would have tried to get a job at like jump trading, Hudson River trading, Citadel, something like that. Do that for 3 to 5 years, and then branch off and run your own fund. But those are really the main quant shops that are very sought after on the street, right? Now, Citadel has 2 divisions. You have the market-making division, and then you have the hedge fund business. But there's a lot of really good quantitative researchers that work for Citadel, that work for 2 Sigma, Jump Trading, Hudson River Trading, Renaissance Technologies, D.E. Shaw. I'd say those 5 that we just named are probably the highest, most coveted quantitative researcher jobs on the street, in my opinion. And they make a killing. They make a lot of money. Those strategies make a lot of money. This is the French investment bank, BNP Paribas. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these live streams pretty much every night, starting at 8:30. NMB 45 says I used the city bikes in New York City to avoid the subways. Yeah, I mean, it's kind of nice and it's kind of fun to ride the city bikes when it's nice out, but during the winter, not the best. Tomorrow's supposed to be a nice day in the city. It's supposed to be like 60 degrees. We are now going to head right through the belly of the beast here. Look at the graffiti on this truck. EMV. This is Tom. Do you think artificial intelligence will help create more jobs overall, or do you think AI will lead to less jobs across the board? I think AI is going to kill off a ton of jobs, but just like in every single technological revolution, it tends to create 5x the jobs it destroys. And we've talked about this before. I think this is an interesting conversation to have again. And this is the way I think about it. And it doesn't mean the way I think about it is right, but this is the way I think about it. If you go back, like let's say you went back in time, right? You were able to time travel. You could go back to the future. Great segue. and you could go back to, let's say, 1990, right? And you could talk to your, former self. And you would just talk normally about all the things we have today. Like, oh my God, we have smartphones, and we have ChatGPT, and we have all this different stuff. We have the internet, we have cellular phones. We watch live streams of New York City on the internet, right? They wouldn't even know what you're talking about, right? So, for example, if you just kind of named off some of the careers, oh, I'm a software engineer, I'm a Salesforce administrator, right? Those jobs didn't even exist because those companies, like Salesforce, the company didn't even exist, right? And these are high-paying jobs now, right? If you're a Salesforce admin, or maybe you work on some of the APIs in the back end to make all these different systems talk to each other, or I handle the workday operations at my company, and you work in HR. Like, there's so many different jobs that just have been created over the last 10 years that weren't even relevant in 1990 because none of this stuff even existed. I think that's what it's going to be. So when a lot of people are frightened, right, that AI, machine learning is going to destroy all these jobs, yes, they're correct, but it's also going to create jobs that we can't even think about right now. Like, we don't even know the names of these jobs because they're not even real yet. And they're going to require a completely different set of skills. But if we use history as our guide, they're going to be very lucrative jobs. That's kind of my take. We'll see if I'm right. I mean, what do you guys think about that? I mean, just look at the Industrial Revolution, right? A lot of these factory jobs were gone, essentially, with the help of just the machines that we have now. And in many cases, that's a good thing, right? Because back in the day, we had children working on these factories, getting caught up in all these machines and getting their limbs chopped off, right? That's not good. So humanity gets better, technology gets better in perpetuity, and I'm approaching artificial intelligence not from a dystopian standpoint, but from a very optimistic standpoint, to say that it's going to make our lives much better and more efficient. That's what I'd say. Now, it doesn't mean I'm right. I have an open mind. Yes, could this take a dystopian turn? Of course. Do I think that's going to happen? No. But, I'm rooting for the latter, right? I'm rooting for AI to enhance and assist humanity forward as opposed to cripple humanity, right? And the good news is the vast majority of people on Earth thinks that way. So, or at least I hope they think that way. All right, welcome to Times Square. This is the 49th Street station. You can get the N, R, and W trains downtown in Brooklyn or uptown in Queens. Steph UF says, I just wish AI voices pronounce words correctly. Well, I don't know if you guys saw this advertisement, but one of my good buddies sent me this AI advertisement. And I'm not lying, it looked so freaking real that it was really, really scary. Like, the AI looked like a living, breathing person. I think I retweeted this or reposted it on X a long time ago, maybe 2 or 3 weeks ago. You could try to look at it, but there's this company that sells skincare products, and they've made an AI model to market and advertise its products. And the thing is so real that it's like they hired a real actor to talk about the products. So, I mean, what is that going to mean for voice actors in Hollywood, right? I was thinking about this the other day. AI, if you look up, just go on YouTube, open up another browser, and punch in any song that you want, and then your favorite artist, chances are it's on YouTube, AI generated. Like Justin Bieber has tons and tons of music on YouTube that's just AI generated that sounds exactly like him singing other people's songs. So I don't know what, like that aspect of AI, like what is the litigation going to be there? Like are artists, I mean, I don't know. That is going to be a sticky situation that I have no idea what the answer is. Because if I'm an artist and I'm singing a song, or I'm, you know, contracted with the company to, you know, promote a product, but then all of a sudden they could just say, you know what, we don't want to pay you, we're just going to clone you via AI and make you say all of our stuff. So I don't know. That is something that's yet to be discussed. Someone says AI will likely eliminate the recent surge of OnlyFans. Well, I don't know about any of that. Doc Seven says, you're right, Tom. Same with all industries. There are medical biotech professionals now that didn't exist 20 years ago. Yeah, I mean, that's another thing. That's a whole other set of conversation and technology that's going to be insane. I think it's called gene editing technology. Apparently, and again, I'm not in the medical field. I'm not a doctor, but I've read a lot of equity research reports on some of these companies. Now, maybe these are pie in the sky ideas, but at some point, we will be able to literally edit your DNA and edit away some of these illnesses that are hereditary within your family, apparently. I think CRISPR gene editing is a company or a type of technology that does that. I mean, where are all these Elmos coming from? I think I've seen like 20 so far. You got 2 of them right here, 2 of them right there, 8 of them back there. But yeah, I think CRISPR gene editing could quite possibly be the thing that cures these diseases and cancer and all this other stuff, which is a net positive for society, 100%. Additionally, right, if we want to continue on that conversation, Neuralink, I believe, is going to be the #1 technology that's going to propel humanity forward more than anything else. This Neuralink chip device. I'm convinced of that. If you haven't seen the recent video that was released by Neuralink of the gentleman that had the chip put in his head, and now he can play chess just using his mind, you got to watch that video because it is so encouraging for society moving forward. It's really unbelievable. So yeah, I mean, a lot of people can be pessimistic. You know, you could talk about the, you know, mounting national debt. You could talk all about our deficits, how we're running all these crazy deficits. But you could also talk for hours about all of the amazing innovation that is just starting to emerge, right? This is like level 1 innovation. These are level 1 products, generation 1 products that are going to continue to evolve and grow. You know, what's the total addressable market? What is the TAM for Neuralink? Right, infinity? Like I couldn't even put a number on it. It's so big. It's everything. So I think we're only getting started here, guys. Hey, Green Star TV, what's up? Hey, Papa Smurf OG, the FDNY is here. Big shout out to our fire department here in New York. Thanks for everything you do. This building is 1 Times Square. At the very top of the building, you can see the ball that they drop on New Year's. 2024 already. Crazy. Doc Seven says treatment tailor-made for the illness you have. CRISPR and CAR T-cell therapy plus immunotherapy are changing the world. And here come mRNA and DNA vaccines to treat cancer and prevent it. You know, I wish I was a little bit more well-versed on that stuff. Like, again, I don't have a background like where I'm educated in any of that. So it's difficult for me to invest in any of that stuff. Does that make sense? Like, I've never, ever invested in a individual biotech stock. Mainly, and maybe this word is a little bit too harsh, but just due to the incompetence to the business. Like, I feel as if you're going to be a really good investor in any of this, you know, biotech stuff, and you're going to speculate on individual stocks, I mean, you have got to have some sort of expertise where you've either developed drugs in the past or you have some sort of biology degree, because if you don't, like someone like me, like, how would you ever know which drug is going to win out or which technology is going to win out or how these things even work? Does that make sense? Like, that's my only kind of like gripe with it. Now, the good news is, as these companies grow, which I'm sure they will, they'll probably be added to the S&P 500, and you can probably get exposure that way, obviously, but I think that's a huge area of opportunity. So any biology majors, or maybe any doctors or scientists, if you can study and do some work on that stuff, like, there's some outsized returns to be had there, like in a major way. All right, let me go ahead and change out the microphone because I have to plug in the battery. But if you guys are enjoying the live stream tonight, make sure you subscribe to the channel because we do this every night. We talk about the financial markets, different technologies, all this fun stuff. And leave a like on the video. All right, 2-second intermission, then we'll be back. Green Star TV says gold is in unstable territory. What's going on with gold? Are we down big? Artificial intelligence will require a new area of law. I think I agree. I mean, you have to, right? I mean, this technology is so powerful. X-Tax is, why is it so busy? Is it because of Passover? Usually Times Square is very busy. I don't know if it's because of Passover, but you are correct. Tomorrow is Passover. Now, kind of going back to the innovations in biotech and the like, the point I just made about not really knowing a lot about the industry is exactly kind of what the media did to really exploit the public. I think it's about 7 years ago now, over the whole Martin Shkreli thing, right? Like, that was a whole big fiasco. It was a big mess, really over nothing. Because the media essentially was pulling on the heartstrings of the individual person that knows nothing about the pharmaceutical business and nothing about the biotech industry at all, right? So essentially, with Pharma Bro Martin Shkreli, number one, the guy's a genius. He's an incredible entrepreneur, right? That's number one. He didn't go to jail for increasing the price on the life-saving drug. The media tries to spin it that way, but he went to jail for something totally unrelated. It had to do with malpractice in the hedge fund business. But essentially, those rare disease drug companies, you better hope that they stay in business. That is a must. Because if you look at the pharmaceutical industrial complex, if you will, the top pharmaceutical industry, the big companies, right, that we all know, the Eli Lillys and the like. I want you to do some research. What are their top drugs? What are the top categories that they focus on, right? where, by and large, does all of the R&D spend go? I'll let you do some research on that. And it all comes down to very simple mechanics of capitalism, supply and demand. You want to make a drug that addresses a large addressable market, or a huge TAM, total addressable market. Now, the problem with that model in the pharmaceutical industry is that there's a lot of rare diseases out there that maybe only 100 people globally have. So using that model, there's going to be no new drugs for these people ever. They have very outdated drugs, they don't work anymore. So that creates an area of opportunity for young startups to come in, buy old drugs that are used to treat or cure very, very rare diseases that maybe affect 100 people a year. Now, in order for those people to get new drugs, there needs to be an increase in research and development. So they raise the price of the drugs. They use that money from the increased sales to throw back into R&D to make a better drug, right? If that model didn't exist, well, then you'd have no new drugs for these people, right? He's raising the price of Daraprim because he wants to go buy, a penthouse on Billionaires Row. Not true. But obviously the media doesn't, do their diligence. They're only in it for the clicks and all the nonsense. And, Martin Shkreli kind of fed right into that kind of bad boy persona. I think if he came on the TV and just said, look, the media is being disingenuous, this is how all rare disease drug companies by and large operate. They have to raise the price so they can invest into R&D and improve these drugs. All right, look at this beautiful shot of the Empire State Building here. Lit up in the classic red, white, and blue. I'm standing directly outside of the Bank of America Tower and Salesforce Tower. Now you're looking at Bryant Park. And this is the beautiful One Vanderbilt building. I don't know if you guys could see that on the stream, but we're finally getting leaves on the trees at Bryant Park. Thank God. Hey, Dan Sang, what's up? It's Tom. I'm flying back to New York City from LAX. Oh yeah, that's right, you were in LA. How was that? I'd assume the weather was much better over there. Joseph's is Rangers won tonight, Tom. I saw that. What was it, 4-1? I think Rangers won? 4-1? Victor says, why does the dollar usually move in the opposite direction of the market? It doesn't always. I actually wouldn't say that's true. But it is true that a stronger dollar does provide headwind to corporate earnings, particularly companies that sell internationally or have a lot of business outside of America. And this was really precedent during the bear market that we just had. So this is actually a pretty good exercise. If you look up the Dixie, where it's trading now, and the dollar's actually rallying in a big way. The dollar strength is pretty strong right now. So let's say, if I'm a company and I sell my products and services in, Thailand. What's the currency in Thailand? The Thai baht? So let's say if I'm selling my product or services in Thai baht, but I have to report earnings in the United States. So I have to convert my Thai currency into US dollars. Well, throughout that quarter, what if the US dollar continued to gain strength? Well, my Thai baht can now buy less and less and less. Oh, look at that rat. My Thai baht can now buy less and less and less US dollars, right? So it puts pressure on revenue. So a strong dollar isn't necessarily good for corporate earnings. A lot of times it can impact it in a major way. So generally speaking, if you say, hey, the dollar's up, the market was down, that's generally why. If you think around corporate earnings, a stronger dollar and every other currency around the world is getting killed versus the US dollar, well, there could be some earnings headway there. This is the Bank of China. I actually really like the Bank of China building. All right, this is West 39th Street we're coming up on. And pretty soon we'll be back to 34th Street, Herald Square. Yeah, Hawaii says you like the building too. It's unique. It almost has this like futuristic flying saucer as the awning here. Looks like an alien ship. Brad says, Tom, I could bench close to 300 pounds. But if that rat... No, I know. Yeah, if that rat popped up at you, you'd run like a child. Dude, some of these rats, and that's a small little guy. If you guys thought that that rat was big, I mean, I got news for you. There's some really, really gnarly looking rats in New York. Let me tell you that. Joel PM says the Swiftie album drop, just heard it. I think you're right. Didn't Taylor Swift just drop 2 new albums? This was on Friday, right? Was it 1 album or 2 albums? One of my friends says it was 2 albums, or like a ton of songs. But I think you're right. I think that Petty Cat guy was playing it. I haven't listened to it yet. I haven't got a chance to listen to it. Joyce is right now, I'm in Thailand, and when I travel to the US, everything is very expensive. Yeah, you know, if you're an American right now, and you're looking to take a vacation this summer, you should probably travel abroad, actually. You know, if you run the numbers, if you do the math, let's say if you want to take a trip to New York this summer and you're from LA, if you travel to Thailand or something, you know, the dollar is very, very strong. So you're going to get a lot more bang for your buck overseas probably this summer. Very, very strong US dollar. You can even go to Mexico. Anybody here in the chat traveling anywhere interesting this summer? Anybody going abroad? I think that'll be good to gauge the hospitality demand this summer. Now, right on the corner of West 37th Street, this is going to be a new residential tower. You can see they're doing some soil testing or soil sampling here. Ah, you're going to Vegas. Cool. Awesome. Vegas is a great town. I think I told you, I used to have to go to Henderson, Nevada. NBA Elias' Mexico City in July. Oof, love that. Shannon's is going to San Francisco next month. You know, can you please report back how San Francisco is? I think there's a really, really good contrarian bet to be had on San Francisco. Now, we've been talking a lot about real estate tonight, how everything is super expensive. You could actually get fire sales right now on condos in San Francisco. Like, if you want something at a 20% discount, most likely you could probably get it in San Francisco. And in my view, maybe a controversial take, and just a full disclaimer, I know nothing about San Francisco. Only connection I have to it is the tech industry. I worked in tech for about a decade, so I have a lot of friends and founders who are in San Francisco, but me personally, I don't really know my way around at all. But if I was a betting man, I think there's significant mispricings in San Francisco residential real estate right now, for obvious reasons. But the market, in my view, is assigning these variables, the crime, you know, the homelessness, the drugs, as a fixed variable. And that is why those assets are trading at fire sale prices. I think those are not fixed variables. Once all of that improves, once the crime goes away, once the homelessness and the drugs go away, not only will those properties trade back to where they should, they're probably going to double, quite frankly. Because the talent pool is still there. So you have all the talent in San Francisco is still there. If anybody told you it left, that's not true. It didn't leave. VC investment is still breaking records in San Francisco compared to other cities like New York, Miami, Austin. So this conversation about AI that we've been having tonight, where do you think all of those startups in and around artificial intelligence, where do you think they're setting up shop? Well, I'll give you a hint. It's in and around San Francisco. It's in and around the Bay Area. So you have the talent. It's quite possible you're going to have like a second wave of this massive wealth effect that was created by all the semiconductor companies in pure play AI. And the government there is being pressured like crazy from these tech billionaires to clean the place up. One of which being Mark Benioff, right? CEO and founder of Salesforce. He's told the local government, he's like, look, we're going to just rip Dreamforce out of there if you don't clean this up. So it will be cleaned up. I think there's a good trade to be had there. I don't believe the narrative that San Francisco is going to go away. It's a great city in America. It will bounce back. That's my take. 34th Street, Herald Square, Capital One Cafe. Hey, what's up, Mohammed? Hey, Tom, hope you had a great weekend. Thanks so much. Hope you had a good weekend, too. At least it didn't rain. Weather was good. Jax is definitely a lot of petty crime. I live up a hill, so it doesn't affect me. New York City seems to have much more violent crime. I do want to move to New York City at some point. Yeah, New York City is a great place to move. Great place to live. Hood Patriots is all walks in Wall Street fam get. Oh, cool. Oh yeah, you own a barbershop there. Please support our friend that owns a barbershop in San Francisco. Please take Hood Patriot up on that. Look, if I'm ever in San Francisco, I'm stopping by for sure. I think the final thing I'll say, because we've talked about this a lot, it seems as if we're at a point in at least the political environment in the United States where we're rooting for these different cities to fail. But at the end of the day, we need to realize we're all on the same team, we're all Americans. And it is not good for America to have one of its great cities like San Francisco be cast into chaos like it is right now. That is not a good thing for the country. So we should all be rooting for a major, major turnaround. And that's what I think is going to happen. You're already starting to see it. So, all right, Macy's Herald Square. Beautiful shot of the Empire. Red, white, and blue. Favorite color scheme. Let's see what Koreatown's up to tonight. Now, I'd say for the big economic data next week, we do have S&P manufacturing PMIs, we have S&P services PMIs, we have consumer sentiment, and we have housing data. We have new home sales and pending home sales all coming out next week. So throughout the week, we are going to be talking about that. You know what, since it's getting a little bit late, let's actually skip Koreatown tonight and let's tour the new Penn project. I should say the Penn 2 project. As a quick reminder, this Thursday, we are going to be emailing everybody, all of our Walks on Wall Street subscribers, our next edition of the Behind the Street newsletter. So if you want to sign up for our Substack for free, you can just type !news, NEWS in the chat, and the Nightbot will drop the link to our Substack. We have about 2 years worth of archived research on there. And we're almost at 5,000 readers, which I appreciate. So thank you everybody who's been reading and sharing our work. I do appreciate it. Hey, right on time, Dr. Longus. Good to see you, as always. What do you guys think? You have a mix of retail, office. Looks pretty good. And this big empty lot used to be the Hotel Pennsylvania, the Pennsylvania Hotel. Looks so strange, just a big empty lot here. I'm not too sure what's going to be in that spot. That's true. K-Force is the homeless. Yeah, I think that actually needs to be named the homeless industrial complex. Some of these homeless organizations within the government have grown so big and are so well funded that it's gotten to a point where the incentivization structure to cure and to abolish homelessness, for lack of a better term, actually doesn't fit within their framework, because then everybody would be out of a job. You know, some of these people are making like $250,000 a year to manage where the money goes to combat homelessness. That's why I say money doesn't solve any issues, right? That's why I always have to laugh when people say, oh my God, this billionaire bought this, $500 million mega mansion and yacht. He could have used that money to solve world hunger. You could throw $250 billion at world hunger, it wouldn't solve it. It's the stewardship of the money, right? Money is useless unless there's a good steward behind the money, right? You can give any random person on the street $1 million. Chances are, right, the statistics show, That $1 million, if you check back in a year, is not going to be $1 million anymore. It'll probably be negative, right? So it's the stewardship of the money and the management that's important. You know, you can kind of tie that back in the investment business, right? If you do an audit of all the top performing stocks of all time, there's usually one common denominator, and that it is a rock star operator that is in charge as the CEO, right? Rock star operator. I'm sure you could just name a few off the top of your head, right? And broader management. If you have management that's derelict in their duties to allocate capital accordingly and efficiently, well, money is useless. Money actually has negative value if it's not in the appropriate hands. All right, we are now on the new platform. I think this place looks great. You kind of have this star illusion at the top. Look at that. Beautiful shot of the Empire State Building. I think Vornado did an awesome job here. Now, if this is the first time you're seeing this area, you're probably not that impressed. But if you've been in New York, if you've been a New Yorker, as particularly a Long Islander, and you've been commuting into the city on the Long Island Railroad or the New Jersey Transit, this is like unbelievable transformation. Extremely impressive. See, when everything is open like this and you have high ceiling heights, you'll never really get any loitering or any mischief, so to speak. To have Penn Station be this clean is very, very rare. They have pickleball courts here. This is going to be all outdoor dining. There's going to be a restaurant that's going to come in here soon. All this is new landscaping. It goes all the way down there. Look at this. What is this? Gelato place is coming in. This is a cool shot. And then down through here is going to take you to the Moynihan Train Hall. And obviously to the left is Madison Square Garden. These construction barricades are probably going to come down this week. We'll have to walk through here again. I don't know, I love it here. I think they did a great job. From what it was before, whew, not looking too good before, but this looks really good. And this is the garden. This is where usually all the players go and everything like that. I think that's Carmelo Anthony. They also renovated this building, 1 Penn. Carl Roth, I would say 270 Park once the new 270 Park is completed, or 350 Park Avenue. You got to look at some of the renderings online of 350 Park. That's going to be Citadel's new office tower. They're going to take up the first 57 floors, I believe. Man, these are beautiful and they smell really good too. Why is this Brooklyn Tower? Brooklyn Tower just filed for bankruptcy. I think they filed for Chapter 11 bankruptcy, which we could get into and talk about another night. And this is the Moynihan Train Hall, but it is also the old post office. You see, and this is all new too. Look at all this outdoor space. Alright guys, well, if you enjoyed the live stream tonight, feel free to subscribe to the channel because we will be back tomorrow at 8:30 p.m. Leave a like on the video, share the show with your friends, and we'll see you tomorrow. Hope all of you have a wonderful, wonderful week ahead. For all those who celebrate Passover, hopefully you have a peaceful and wonderful Passover. And that's really all I got. Thursday, we're going to send out the newsletter. If you want to check it out, just type !news, N-E-W-S in the chat, and check out our Substack, Behind the Street. All right, Mohammed, take care. Patrick, New York. Anthony, Mohammed, Tatted T, DM, Unij23, Joseph, Mary, Harry Connor, Optimus 17, Brad's Brain, Abdullah again. Guys, take care. Always bull market somewhere. You just need to know where to look. Like, subscribe. We'll see you tomorrow. Esmeralda, DC322, Jeff in Southern Tier, New York, Susanna Q4, Mary, Isaac, Hawaii. See you guys soon. NBA Elias, D, Gary Carpenter, Dinesh,